Hi, everyone. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here's what's been making news recently across the Canadian tech ecosystem. Clutch is moving forward again with a $10 million investment. Is tech talent leaving Canada? We'll weigh in and share our takes on why and how the country continues to attract and retain talent. And also, we dive into a few acquisitions and transactions that have been making news recently. And back in action with me to break it all down is Alex Norman. How are
Hey,
you?
Alex. Good.
Hey,
How are you?
I'm good. It's been a while since we've, sat down and done one of these, so I'm excited to be back and get you to weigh in and debunk a few things for us from the news recently. So, a few larger things we want to talk about today, and I know we'll probably really dig into a few of these. But so the first item today that I want to get into is haven't heard much from Clutch, so this is great to be talking about them again. Moving forward with a $10 million investment. So I gave a little bit of the news away, so I'll just kind of lump a few questions together for you to start.
Well,
So, what do they do? What is Clutch for those that need a refresher? And also, why is the round notable?
okay. So maybe I'll start just with a bit more details on the actual round.
Sure.
In particular, was announced as IA Financial is investing 10 million in Clutch. For people that don't know Clutch, it is a used car marketplace
Hmm.
focused on Canada. So this is a space that became highly competitive over COVID and the sorry, not dot com, over the boom post COVID.
Yep.
Um, aging myself a bit there. Uh,
Okay.
and it basically enables people to sell their cars to Clutch, and then Clutch makes it available to consumers, and it's gives
Like a Carvana kind of
yeah,
thing
it's a
in the state.
Carvana. It makes it
Yeah.
much better. It's a digital first, much easier, much better consumer marketplace for a set of consumers. What is notable about this round
Hmm. Yeah.
is Clutch there's very hard to find another company that optimizes or symbolizes the last 5 6 years.
Yeah.
I think they started late 2010, like I feel like 2017, 2018, and they had initial traction. It was doing really well, and they became a hot company. They raised a lot of money, got a lot of attention, and had a round which was famously pulled from at the last minute. And instead of shutting down, instead of taking the easy route, the team has focused on thousands of improvements to become a viable company. And so they did a down round, which was well documented. And this shows that their efforts at investments in the company is paying off, and they've been able to basically grow again, and they have outside
Mhm.
investors coming in. So it shows that the ideas that you can't that people say the death knell of a company is a down round, and it
Yeah.
shows here that look, it's never facing a downhill battle, and challenges is never fun, but it shows that you can build something viable after facing headwinds. Just to give some idea of what's going on here, they sold 8,000 used vehicles in 23, um, making it one of the most largest Canada's retails of used vehicles. And the rumor has it they have very strong unit economics and overall economics now. So they've got probably positive gross margins, good financial projections. Um, and they've taken care of a very hard task. They
Mhm.
took what could have been a Titanic, made it a small, a more flexible, hardworking company that's now emerging from the darkest of times.
Yeah. No, this is all great. And again, a question I always like to throw at you too, just, as an investor and just from that perspective, why would IA be interested in this? Why would they, want to invest in Clutch?
So if they're investing in Clutch, I think it's in this case it's dual fold.
Hmm.
One is, maybe take a step back. IA Financial Group is one of the largest insurance and wealth management groups in Canada.
Yeah.
So obviously, from wealth management, they want to, or just any corporate making investment, they want to see a return. So they must believe in the future Clutch that can provide a financial return. More importantly, here is there's a strategic partnership between these two companies. If you go purchase a used car on Clutch, they offer extended warranty and guaranteed asset products through the Clutch platform. And this might be a way of cementing that deal, making sure that strategic deal has financial incentives because they both benefit from the growth of each other. Maybe they have now incentives to give a bit better terms to Clutch. But more importantly, you look at his partnership. I'm sure when you sell extended warranty and guaranteed, these basically insurance products through Clutch, that it improves their unit economics better because, hey, maybe they make a margin on that, which I'm sure is better than the pure used car space. IA Financial Group has distribution to a bunch of new customers cost effectively. So it looks like a win-win partnership that's backed
Mhm.
by a financial incentive.
And just lastly, I know you kind of shot out a few things, just like takeaways, I guess, from your perspective of just the partnership, obviously positive growth trajectory for them. But is there any important takeaways just highlight for the community as to like why this was a win and also why we're talking about this?
So a few things. Everyone gets excited about the vision
Hmm.
and the money a company raises, but it's a millions of small decisions that help improve the economics of a business. Now, look, when you're selling software, you may have an 85% gross margin. It covers up lots of sins. This marketplace, where Clutch is buying and selling automobiles, used car dealers usually have an operating margin of like 2%. So
Hmm.
every small change a company like Clutch makes improves their margins. And to get from 2% to, I don't know, 4% or 5% is a huge win. And so you can see, when things are going well and capital's flush, it's easy to ignore the small things that help you get a 10% basis to 10 basis points more margin, but they add up and it affects a bit of bottom line and makes the company sustainable and it creates value. Um, Also, a reminder, as much as a lot of the companies are going up and we cheer them on, some go down again and some come back up. So I think our ecosystem gets too excited for early winners, gets too depressed about the companies that are facing hard times when we need to see over a long run what a company does. Finally, when there's a big idea that seems relatively obvious, hey, let's make a used car marketplace digital
Hmm.
first in Canada. In good times, it's easy to raise money and you think it's the best thing, but it causes lots of competition. And
Yeah.
that competition makes it harder to win because capital acts irrationally. My bet, without knowing anything, is you've seen a few of the competitors in this space go out of business because they could not raise capital. That the shrinking overfunded digital competitor space has allowed Clutch to just generally get more healthy margins to start with before all the improvements. So people, sometimes people say, "Oh, it's a hard time, it's a shitty time to start a company." It's actually, when capital's not available, if you can raise if you can raise it's a more strategic advantage, and it also creates less headwinds with less competitors.
Right.
So every time is a good time. Just depends how you execute.
Got it. Okay. I wish there was like a more creative segue into the next headline, but again, I think all of that makes sense. I think it's just it's a
Well,
unique headline just because we haven't talked about them in a while, and I just think it's important to highlight. It's
well,
always a good time to find an opportunity.
if you want, you can say, are people buying used cars to leave Canada? If you want to get into the next headline.
Sure. So, yeah, maybe they're buying the used cars to leave the country because the next headline has to do with, I mean, tech talent specifically. I think, as we talked about kind of before we started recording, I think it was positioned as it being about tech talent. Obviously, we know it's more all encompassing in terms of just talent in general within Canada. So, saw something recently, and I know a lot of folks have been talking about this too, just about 126,000 people from Canada moved to the US in 2022, and it's a 70% increase from 2021 and is the highest numbers we've seen yet. I know you have a lot of opinions about all of this. So, do you actually think this is happening? Do you think,
So
tech talent is leaving Canada?
okay, let's break a few things down. First,
Yeah.
like it feels like we're talking about it. Like you go to
Mhm.
Twitter, you say, "I noticed founders decided to start up in San Francisco." Like you see a lot of social media posts. Yeah, to answer your question, let's take a step back before we get actually into your question.
Sure.
Um, Canada loves talking about a brain drain. Tech ecosystem loves being worried, especially in this current environment. You go to social media, you'll see every day 5, 10 posts about this founder leaving or that founder leaving. um, you'll see articles like this get retweeted tons of times, and I think at some level there is a bit of anxiety about the current state of Canada, and people with means, and I'm not talking about the brain drain we're talking about in this article, are exploring options, but those people are always exploring options. Second thing, let's just again, I don't know why they say this is the highest number seen yet. I
Yeah.
feel like it's relatively low. And that 70% increase is coming off 2021. We were in lockdowns in 2021. So was
It's
parts
true.
of
I
California.
think everybody wanted to leave to
So,
avoid the
so,
lockdowns,
so,
right?
so you couldn't leave in 2021. You couldn't go to California probably. So
Yeah,
there's going to be a natural bump increase, like just travel increased.
for sure.
Okay, so that's the first problem I have with this headline. Second problem I have is that 126,000 is all Canadians. That's not just tech. That's people leaving to the United States for many reasons. Some may be recruited. Some may be going to school. So my guess is the number of tech people is relatively small. Now, given that people do leave Canada and
Hmm.
do go to the States or other places for parts of their career, and look, I'd love to see all the towns stay here, but it's going to happen for many reasons. People always see the greener pastures. People get offers. I think the key thing here is it's not necessarily a bad thing. So that's my initial reaction. Now you can ask any additional questions.
Sure. Yeah. Well, I have a few additional questions, but no, I think it's just good to elaborate on the fact that yeah, it made it sound as though it was just speaking about tech talent, but as you mentioned, it was just kind of an all-encompassing thing in terms of talent. So, is it an issue? Like if people leave Canada, like
Look,
what's your opinion on this?
it sucks to lose talent.
Hmm.
Um, but I look at it slightly different. I think if you play the long term game, it depends where these people end up after a while. People go to school, people go to California. A lot of people return. I'm, a generation older than, probably students at University of Waterloo right now. When I graduated McGill, we were talking about brain drain, and I was part of that. I went to New York, went to San Francisco, I
Hmm.
lived in London, I lived in Philadelphia, and I got trained in professional services and startups and in finance in a way that I don't think was capable here. And I decided to come back. I have a lot of friends that have not come back, but I came back, and I think provides me connectivity to the rest of the world. B, I got training from other people that helped bring me here and add value to this ecosystem. So I think it's a look. If it's just one way and we're always losing people,
Yeah.
it's not a good sign. But I
Right.
think it's a natural. That's what you have when you have open borders. And look, I'd like to. I think the bigger problem is when we lose the companies that are companies get acquired instead of scaling up, or when we lose the talent that's critical to, and maybe some of the AI talent that's leaving.
Yeah.
But I think it's all relative, and it's part of the healthy ebb and flow of our ecosystem. And I think if we were completely an isolated border, isolated where people just came into us and no one ever left, that would not be healthy either.
Right. Um, just like off script a little
And,
bit, do
and
you think it might have to do with what someone's building too, as to like why they might want to stay and why they might want to leave?
the perceptions, some are not healthy. I think historically why people left was founders left because they thought it was easier to raise in the States.
Okay. Yeah.
To a certain extent, for some, if you're like University of Waterloo, you did a summer internship at the current hot startup of the day, it may be easier to raise. But generally, I think that is overblown, and because I think also there's different expectations and there's more funds. But like, if you're losing the rave, you're leaving to raise because it's easier. Fine, that's something we can improve in the ecosystem. We've always been behind. I think we're better at funding. There's more capital here than there was 10 years ago. That people were always leaving for that reason. I think we can improve there, and we'll never get to the point where we're on par with the Valley or New York, but we can get better, and people will leave for that. And that's not a huge number of people. And it's a
Right.
huge number of future potential jobs. But I think the best founders go to the States and then open up the dev team and a lot of the team in Canada. So we actually benefit from that. Second reason people believe is for higher salaries.
Yeah.
Um, I think there is higher salaries in the States. I think where lots of people live, the higher salaries aren't necessarily higher, better cost of living. I left and worked in New York. I worked in San Francisco. I've worked in London, England.
Still expensive places to live. Yeah.
Disproportionately more expensive, disproportionately better taking your money than Toronto, Montreal, Vancouver.
Hmm.
Um, it may have got the ratio may be better now than it was when I left. But if you're leaving just because you think, I think you could, I think if you're going to be an employee and you don't play the big corporate game and you're not doing professional services, that makes sense. And it's a pity. And I think it goes back to the big challenge there is our infrastructures. We have a bunch of oligopolies, so no one's incentivized to pay employees that are worth their actual proper wages. I'd love to see us have higher wages for employees across the board and attract more talent. And I think that one's a historical problem. I think the numbers of people leaving for that hasn't changed, because flip side is, as much as the problems we have in Toronto, Montreal, Vancouver right now, I think the quality of life is much better. I think your ability to take a risk on is much better. You have you don't have to pay tons of money. You don't have to move to a specific neighborhood for education. Our healthcare has its problems, but it's still not going to bankrupt you. I think the youth, when you're younger in your life, you underestimate the value of that. Our cities are still very walkable compared to cities, other than New York and well, those cities are all walkable. But like, I think a lot of people return when they want to have family, to be close to family, because these cities are, our cities are much, I think, much more family friendly. You can disagree with me. It's not less accessible than it was 20 years ago. I think the big change in the mentality over the last 12 to 18 months is twofold. The belief that our social contracts falling apart, the health, education, security's fallen.
Yeah.
I think also the belief that we have relatively incompetent government across all sectors, but particularly the federal level. We have a party that views anyone making money as a cash cow that should be taxed. And so we can get into realities of whether stuff are better or worse. But the fact that people are thinking that leaving because of those reasons is something that we have to address sooner rather than later, because it becomes a self-fulfilling prophecy eventually, and then you lose your tax base, and then you have to increase taxes. And what I don't want to do is become France. France has a lot of great technical talent, has a great social system, but started imposing taxes on people they thought were doing extremely well, and those people just left, and then they've created sort of a death spiral where they have to keep increasing taxes and more people leave. And I don't think we're at that point, but there's the perception at that point, and that perception has to be changed as soon as possible. Because
Right.
It's much harder for me to leave. I have my kids here, I have my
Yeah.
parents here, but people are in their careers, are, if they feel that they're high potential earners, why, or people that are, much wealthier, they have the means to leave, and those are the people you want staying. And I don't think it's a big.
Exactly.
And let me be clear, I do not think it's happening now. I think a lot of people are talking about it, but I think the fact that people are talking about it is not a good thing.
I do actually have a few friends that are talking about doing that too, about, they could be making more in the UK and it's also cheaper to live there. But again, it's
It's
an
not.
idea.
That's not cheaper to live there. I can tell you, I was just there and I lived there. I
It
think.
was
I think.
interesting.
Look,
It was interesting.
go
She
on.
gave me the comparables, and I think it just maybe depends where she was looking to live, but it was actually cheaper than it
Yeah,
was
but
here in Toronto, which was, to me, was insane. But
you have to
yeah,
go compare Toronto to London. I think
for
you
sure.
don't compare Toronto to Manchester. Like,
Of
trust me,
course, yeah.
you don't want to live in Manchester compared to Toronto. No offense to anyone living in Manchester. But I think,
Any
look,
Manchester fans listening, we're sorry.
well, but look, when Trump won the first election, not to get into politics, how many Americans were on social media saying, "I'm going to move to Canada if he wins"? Look, talk is cheap.
Yeah.
A lot of people grumble, very few people take action. But the more people grumble, that percentage stays the same. So I'd rather have less grumbling. And I think there's nothing that's not fixable with the
Mhm.
proper leadership in government. Now, can we get the leadership? That's a whole other question. But that's a question the whole world's facing right now. Like, you can't, I'm sorry, you know, the leadership choices at the federal level in the states aren't that exciting either. Now, the states is a bit different structure, how the government goes, but like, there is structural problems with leadership everywhere. Eventually, just you're choosing, the best benefit for yourself.
Right. And I know I kind of asked you if it had, again, like, we've kind of covered, like, not just necessarily related to tech, but like a lot of reasons why people are talking about leaving too. Obviously, we're bringing this back to tech sector specifically. Um, Canada has, again, also talked a big game about like its projections for how it's gonna build on, AI and all of these things within the country and Ontario and the tech sector and all of that. Do you think a lot of people also want to leave because it is actually not as big of a presence here as it is in other places, and there's a lot more that can be done going to the US versus here?
I don't know. Look, I think the best thing a government can do is give people reasons to build and get out of their way. Um, I don't think it's like, hey, let's throw a bunch of more money at AI is the solution.
Yeah.
I do think, it takes time to build those flywheels. We have much more of a flywheel network effect in our three major, Vancouver, Toronto, Montreal, and to a lesser extent Alberta, than we had a decade ago. This stuff takes time, and California in particular has been doing it for 30 plus 40 years, right? So it is going to be attractive. It's a hypothetically easier place to be, but the harder place to actually stand out. And so I think the flywheels are going here. We just don't want them to stop. And if we can get them to move faster, we'll attract more talent. And it's night and day difference between now and 2010, and people
It
forget
is.
that.
For sure. And so again, like as just like to bring it back to your investor perspective a little bit, obviously Canada is a little bit more known to be, more conservative and risk adverse when it comes to making, large investments in companies and things like that. Do you also think that's another reason why, there might be a preference with, US based investments or US based
Capital will
companies?
flow everywhere, right? I think the hardest round is the pre-seed round, which is where I invest. I'm like, hey, if you want to be bold and build something, that's world changing, I'm happy to back it if you come find me. And I think there are other people out there. And if you build something great, and it doesn't take long for capital from the world to find you, no matter where you are. And Canada has
Mhm.
pretty good tax treaties that make it easy to invest here. So I think it's most founders that complain about it, and this is going to be harsh, but I think it's a grass is always greener on the other side. It's not easy. It appears to be easier to raise in the Valley and New York, and hypothetically, there is more funding. Well, there is more funding going on there, but it is much more. It's just as competitive, not more competitive, in the ability to get into there. And there's a few places that are different. Like I think YC for all, is a pretty egalitarian ability to get into versus other stuff. But like lots of these rounds that get done is because someone was at Pinterest, employee 100 and employee number 30 and employee 20 are now VCs. And so that $2 million check goes to somebody they know. If you walk off a plane from uh, Ohio and don't have connectivity to the Valley or incredible accomplishments, and your idea seems like a Me Too, you're not going to raise there either. I think what we could be doing different is we could be investing more in companies. We could have more, we could have more institutional investors providing more capital and more funds going into capital, because I think we are underfunded. I
Yeah.
think our founders could be sharing the wealth a bit more, paying a bit more. We do have the benefit of shred, so your salaries are subsidized. So go compete on salaries against the Valley, and we can give more options. So when there's a success, there's more money flowing around. But that takes all these things are make it harder. Are harder in the short run and take a long time to pay off. If we fund the best companies, they can scale. But it takes 10 years, 15 years for a company to exit.
Hmm.
Um, and if you want to be bold, like it's your personal circumstances should dictate where you are. And I feel like I'm now venting. Well, if they have the luxury of growing up here, they have the parents here, you can go get free rent. It sucks. And you
Hmm.
can lower your cost basis versus going to the Valley, where even if you live with 5 people, you're going to still pay $700, $800 a month,
Yeah.
probably more. There is talent density in the Valley and the network effect, but there is some here too. And it just depends what you're doing and how you go after. And I'm
Again,
sure whatever I said, I'm going to get people that listen to this will roast or disagree with us or agree with us. This is one I'd
it's
love to get your comments. Like, look,
yep.
I'm naturally pro Canadian, pro to market. I think I look at the challenges we have as opportunities to overcome. I think we have the talent, we have some capital, and we got have more access more to capital for stuff working. We could build massive things here, and you can have impact here and have the best talent. There's a lot of advantages. There's not less competition for talent. You can break through the noise and get more attention quicker. Retention's higher here. You can sell to the states very easy from here, right?
Mhm.
So, but like, if you think I'm absolutely wrong, let us know. If you think I'm right, it would be nice to know too. But I'd love to hear people's opinions.
Sure. Yeah, because this is our opinions, obviously, right? And it's just very much like opinion based. So yeah, share your opinions with us. You can respond directly, share it on social, yell at us in person at an event, whatever you want to do. You shared just in that last statement, like a lot of takeaways. Any final things to just debunk or that you just want to put out there before we move on?
Two different minds. If you're a founder, just build.
Mhm.
Just start building. Who cares where you are? If later on you think it's better to be the states, you can create a Delaware entity and flip it over. If you're someone that's looking to work in the ecosystem, think long term. Don't think about the short term boost. And look, I love, I have no problem with recent grads or anyone going to this, States or Europe. Learn, take advantage of that, bring it back here, bring your connectivity here, and help us grow this ecosystem. I'm I'm not worried where we are in 2 years. I'm worried where this ecosystem is in 15 and 20 years. And if you're complaining about salaries or you're complaining about funding, become an angel if you can. Pay bigger salaries if you can. Like most of us, demand a higher salary. Like, and it's not an easy market to do it, but like lots of us have the power to make a difference in this ecosystem. Each small, again, sort of like I said with Clutch, each small difference adds up over time.
Mm-hmm. It's a great place to leave it, but I think there's a lot of space here for other people to weigh in too. So that's awesome. So please weigh in and share your takes and what you think about what we just talked about. So lastly, we're calling this Transaction Fest, as we're calling this last segment, I guess, as you say, for the show. So bunch of acquisitions or transactions, I should say, announced very recently. So again, great to be talking about, more of this kind of news. So acquisition front, what's going on there?
Well, I've seen at least 6 transactions announced since the beginning of the month, and really we're talking about since July 4th.
Mm-hmm.
I'm sure there's more I've missed. This is much faster pace than we've seen historically.
Yes, and again, just faster pace, a lot happening. Do you think this is a sign that a shift is coming, or that we've seen the shift and it's just going to continue to be happening and more announcements like this will happen?
Yes, but with very little confidence.
Okay.
We've been talking about, I think instead of 22, we're going to see more acquisitions
Yeah.
because the funding markets are slow. I think we're now got it's been an uptick, but we now know where we're standing out. And so I think a lot of companies that were hoping they could outlast the market slowdown are finally saying, hey, we've squeezed everything, all the juice out of this company.
Mm-hmm.
We're not profitable. It's not going to be easy to raise. So it's now become easier to consolidate in the industry, and you're seeing startups sell a bit faster. Flip wise, we're talking about a small number of deals, and this could be just a coincidence in announcements and timing, right? Because all these
Right.
deals, some deals take a day, no deal takes a day, but like some deals take months or years to come together, and some
Yeah.
come back faster. So it could just be a coincidence. And
as you say, sometimes people don't always announce them right away when they
yeah,
happen, right? It could just also be the timing in which they've been announced. Just for those who are listening who might not know, could you just remind us, like, just why most transactions do end up happening?
so at a high level, which is a bit different than what we normally say, is I think someone's looking for promotion to have an impact on the company. And how,
Mm-hmm.
so what's the way you do that? Either product breadth. So we're going to buy something that we can either sell to our customers and, or just lock our customers in or win more customers with. And it's a product we could build, but we decided to buy instead. We're trying to buy a bunch of someone else's customers and reach. It's a new geographic area. It's a new segment. It's just current customers we don't have. And we believe we can sell, so that increases revenue. Maybe we can sell our products into them as well. Talent. Hey, let's just get a bunch of great employees.
Mm-hmm.
And sometimes economies of scale. Hey, we go from, we combined 2 entities, each had 500 employees. Like this is the most, we have a back office of 150 employees each, so we can get rid of 50 employees. And all of a sudden our margins look better. Maybe we have more negotiating power with, NVIDIA or Amazon. I don't know who to get cheaper chips. I don't know. Probably not that scale, but like you will have, maybe we can get better terms from our, on our venture debt. So there is like economies of scale as you just get bigger. You can save money.
Right. So I want to get into like the announcements actually now specifically, and have you just kind of rapid fire and share, why they happen, why you think it's interesting. So we'll just go in order because it's a bunch of notable names. So
Okay.
why don't we start with Quest Diagnostics first and work our way through?
So Quest Diagnostics bought Life Labs from Omers for 1.3 billion Canadian. What's interesting here, first, you have a financial buyer. Let's look at the motivations. The financial investors buy company with the idea they'll generate a return by exiting the company over a limited amount of time. So like we're not holding this indefinitely. In this case, Omers did sell the company, but it lost because they've apparently invested about 2.5 billion in the company. Quest Diagnostics saw an opportunity to purchase customers in an underperforming asset that they can bring expertise to. So Quest is in the exact same space as Life Labs. They got to enter the Canadian market, and they expect to accelerate Life Labs' growth by providing its expertise and resources. So they said, like, we can see improvements to online appointments, scheduling patient services, centers. They said they could see improvements to online appointment scheduling, patient service center processing, and data security, among many other things. So again, they're going to take like a clutch approach. Hey, we see 20, 30 levers, we can get 50,
Yep.
a bit of improvement, so we can either help them grow faster and or make better margins. So it's an interesting transaction where, the pension plan didn't come out like they expected to. Probably got tired of holding, didn't see the growth, and then a strategic buyer, and this was done after like a sales process, decided, hey, there's a lot of opportunity for growth here. We get new customers, and we can make their customers more valuable.
Okay, so let's go into the next one because we're just going to go in chronological order. So Bell made an acquisition. So what's the news there from Bell?
Bell purchased Stratagem, a security service provider in Mississauga, and Cloud Kettle, a Halifax-based professional sales firm and Salesforce consulting partner. Look, everyone knows Bell for their phones and internet. They may be where they have media, like own a bunch of media properties, but they also compete in providing cloud services to Canadian businesses. My guess, despite facing significant competition in the cloud services space, this is probably one of their better performing divisions right now, with probably good growth and good margins versus everything else, which has very strong competition and headwinds. And so they're sort of beefing up and reinvesting in their growth vehicle. These acquisitions provide a more robust product suite to sell to customers, talent, and my guess is customers in the Atlantic region. Not sure if this was a good outcome for the companies involved. They did not disclose how much they were selling for. I was not aware of these companies. My guess is they're service based, so they're basically more or less bootstrapped with a bit of outside money. So it was probably a good outcome for the founders and people at these companies.
Okay, and just moving along to tuck-in acquisitions by Canadian scale companies. So just what was the first deal, the second deal, and then just lastly.
Well, we'll stick to the first one. Let's go through it one by one.
Yeah.
Recently taken private, MDF Commerce acquired California-based Eco Interactive for an undisclosed amount. Why does this happen? Look, MDF looks to be increasing its product offering for its government vertical, and maybe picking up several customers as well. So MDF has like a strong presence with government clients. So this could be another product they can sell. And Eco Interactive has some customer questions. The question is, why was this company sold? Actually, why could this transaction even happen? I'd say it's interesting. In both cases, I'd say there was financial investors involved on both sides of this transaction. Eco Interactive was acquired by Alpine Software Group in 2017. They seem to act like a sort of like a PE firm, and may have been able to see a nice financial return here and looking at that maximizing their return by selling. MDF went private recently, which gives them a lot more leeway to operate and make acquisitions that may not be immediately accretive. I'm not saying this is accretive or not, but it probably being the fact that they're private probably increased the chance that they did this acquisition.
And then I know, because that was the first deal, what about the second deal, kind of in this two-parter?
Yeah, DTL acquired Norway-based H5P for roughly 26 million USD. Appears to be purchase of the product, in this case, content creation tools. It is not clear if there's a better way to lock in customers, win customers, or increase share of wallet.
Okay, and just finally, the last one for this transaction fest that we're talking about, it was the Path Factory news. So they acquired Uberflip. So again, why did this happen? Why is it interesting?
Again, all speculation. So if I'm wrong, please forgive me. Look, Uberflip appears to have been going through transition, difficult times over the last 18 months. Both founders left the company. There was a headcount reduction. There was a new CEO came in late last year. Both these companies are owned by PE shops, and they must believe consolidating the two companies will provide economies of scale, a strong product offering and a strong management team. It's interesting. Uberflip is keeping its brand and sales related personnel. It's not clear it'll be keeping its back office or technology team. So right away, they may be able to combine the two companies, get rid of a few employees, and have better margins right off the bat.
And anything that you want to highlight about like why this might be
Oh,
interesting?
a couple things. This was called an acquisition, not a merger. Again,
Okay.
not sure exact relative size between the two, but they seemed relatively their same space, relatively similar size. So the fact that it was called an acquisition implies that this this wasn't a merger of equals, which is always interesting because wording in these people argue over positions and wording, and
Okay.
this also gives me reason to believe that Uberflip was a bit of having a more challenging time than Pathworks. It was an all stock deal. So usually when a PE firm sells, they want cash to return to investors, but
Yeah.
they got stock. So I have to they have to believe that they either believe there's such a strategic benefit that they want to continue acquiring, and this will increase the value of the company significantly above their hurdles. Um, and maybe due to immediate benefits and evaluation up by being larger, or there's no other buyers with a reasonable offer on the table, and they just wanted to not manage the company. And I'd like to think it's the former, not the latter.
Okay.
Um, the two entities also may face headwinds in selling services in the current economy. And with the emergence of generative AI, they do have generative AI products. And this might be a preemptive attempt to get stronger before things get tougher.
Okay. So when you see like acquisition versus merger, that's might be an indication that it's sort of preventative or more taking action to avoid reaction like coming.
Yeah.
Is that sort of what you're saying? Okay. It's just interesting to highlight the wording, how that to you seems different when you're saying merger versus acquisition. Uh,
Like if
cool.
Intel's buying, like if Shopify is buying some pre-seed company, that's definitely an acquisition, right? And you expect
Right.
they're not,
Yeah.
they're not going to call it a merger. But if you have two companies of equal size or similar size, even one that's like twice the other size, usually you see if it's like, hey, merger, and then you see the executives that are getting which roles. There's a lot of ego play in these deals,
Hmm.
and if there's any, it's people rather have a merger and have their executives in a role. If it's an
Right.
acquisition, there's an implication there.
No, it's a cool call out even just for me because when I would think merger, it's like companies merging together, but an acquisition is, to me, ultimately leading to the same result, but clearly, you know, different factors are involved in either one. So an
Yeah.
interesting perspective change for me. We went through a lot today and obviously, stated a lot of our opinions on just what we've been seeing lately. So yeah, as Alex said, please weigh in if you have any commentary, you want to share your own perspective on it. Before we go, we have some events coming up, I guess, to close out the summer. I can't believe it's July going into August. And so just a few to highlight. July 22nd, that's next week on Monday. We're at Chrysalis at the Creative School at TMU. That one will be, massive. It's very AI specific. So we have a lot of great builders that'll be there talking about, how they, built their company, how they're staying competitive in the AI space, things like that. Anything you want to share just about that
No,
one, Alex?
that's it.
And then,
Sorry.
good. I'm just making sure I covered everything, covered all my bases. August 12th, we have another one also at TMU at the Creative School. That one is more of just a tech together, pretty standard like we usually have. And then September 16th, we have a travel event. So again, everything travel tech related. Make sure to check out that one at 111. And then September 17th, we're back at Rotman for our TechTO togethers. So lots coming up, a very busy calendar. Quieter August, but again, September kind of gets right back into things. Did I miss anything? Anything you want to call out before we go?
No, that's. I think you've covered everything. I think we have a busy. I'm looking forward to the AI thing next week.
Me too.
But yeah, no, excited to be back in person.
Me too. And just also excited to, yeah, just have so many notable people coming to talk about AI. I think it's something that people are very curious about and have a lot of questions. So that will be great. Alex, thank you as always for your opinions, sharing your perspective with us. It's much appreciated. If you enjoyed today's episode, don't forget to like and subscribe wherever you watch or listen to your podcast or your news. And we'll be back with another episode of TechTO Quick Takes in a few weeks. And until then, we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.